these days. It's the rule.
Yeah, I like that. I'm going to use that.
I think people are signing on, and a lot of people are going to know your background anyway, Paul. So why don't I start with a brief introduction about you as people sign on, and then we can get underway.
Surely.
And if I don't touch on the right things about your bio, by all means, ad lib.
Yeah, feel free to interrupt or whatever. I'm used to it.
Good. Well, we're really happy that you were able to join us today. Honored that you would be able to speak with our clients. Energy has been the largest component of inflation in the US and globally over the last year. So it carries a far bigger impact on the macro environment than it can on the stock market, given how small the energy sector has shrunk to over the past several decades. Paul's research focuses on making money for investors, particularly equity investors, in the energy sector. Over the past 2 decades, he's become one of the most respected voices on Wall Street through his comprehensive and insightful analysis. Today, he'll give an overview of the setup for energy equities, and one of the most significant elements of the market for energy equities is the hollowing out over the last couple of decades, and both from the market cap, but also the brain drain, and I'm sure that Paul will touch on that as well. So feel free to add anything, but why don't I kick it off just by saying we passed Labor Day, Paul, and has that traditionally marked a seasonal shift in the energy sector, and how should investors think about that in this particular year?
Great, thanks, Bob. It's a pleasure to be here, and I'll address your Labor Day question in 1 second. I'll just qualify myself. Hi, my name's Paul. I'm an oil analyst. Actually, when I started Sankey Research, I called it the energy transition on Wall Street as opposed to oil analysts, because in 2020, when I started in mid-COVID with oil, it actually nibbled under 2% of the S&P 500. You didn't brag about being an oil analyst at all, but now, with the confluence of events that we're seeing, it's not so shameful to admit that you're an oil guy. But I continue to cover the energy transition. I qualify myself just by saying I started doing this in 1990 at the International Energy Agency. I was very lucky to be put on non-OECD statistics, and I always claim that I've made up a lot of the numbers that are still used because we really didn't have any data. And of course, if you think back to 1990, China was very nascent. We were talking about the Soviet Union, with the Berlin Wall, everything else, apartheid in South Africa. And I would say that there's been 3 very big mega themes to think about. When we were first modeling the world energy market at the IEA in the early 90s, the clearest future driver that we saw, and back then our outlook period was 2015, I'm happy to say, made it. But the biggest thing was China, and that has been the biggest thing. And that's significant for when I start talking about post-Labor Day, as China has been the demand driver of oil. And you've got to always keep in mind that the first principle is demand. I think the second thing that's been enormous as a mega theme over the past 20 or 30 years has been the shift in the US. So if you were modeling the global energy market in 1990, you just assumed that US oil and gas production would continue declining forever. It was a given for at least a decade. But then in the 2000s with unconventional gas, and then in the 2010s with unconventional oil, we've had an absolutely enormous shift at the margin, obviously, with the US now becoming, this year, likely, if not already, the largest gas exporter in the world, coming up from 0 in gas exports, LNG exports, I should be specific, 0 LNG exports in 2016. We're now going to be the largest in the world, overtaking Australia and Qatar. And of course, the oil situation has completely changed. 10 years ago, we were importing net 10 million barrels a day of oil, a lot of it from the Middle East. Today, we're essentially import neutral. And then I think the other thing, which is very oily, would be that in the course of the past decade, not least because of the shift in the US and the implications for geopolitics, was the confluence of Saudi and Russia, which became OPEC plus. And if you know your geopolitics, you would know that for many, many years, Saudi and Russia really hated each other. And the fact that they're now quite strong allies alongside Russia, China is a very dramatic shift. Okay, so that's 3 mega themes to think about. And I think the forward themes are obviously going to be on the demand side: EVs, EV penetration. I think the rehabilitation of natural gas from an evil fossil fuel to a necessary transition fuel would be a couple of the obvious things. And what I've said is we're beyond peak ESG. We've seen peak ESG, and that's obviously in itself important. But at the same time, I've started saying that the energy transition, when you think about it, is actually currently an energy regression, which is to say I'm about to write a note on coal because we're using all-time record quantities of coal, which wasn't in the transition plan, obviously. Okay, so post-Labor Day, typically, if you look seasonally, I think 13 or 14 of the past 20 years, oil falls from Labor Day, oil prices fall from Labor Day to the beginning of winter, which I've always characterized as the first snow in New York, which is around the 5th of December, depending on the winter. But it's around early December that we start getting wintry, and then, we'll see what happens. And obviously this year it's particularly significant because of the energy crisis that we've got, which is a global thermal energy crisis in terms of supply shortage. We'll see what winter brings, but obviously, depending on how fast you're trading, and one of the challenges of my job is always trying to help people at hedge funds who are, trading many times a day versus people who are taking 3 to 5 year positions. On a short-term basis, we're pretty bearish. One of the interesting things that used to help me a lot in thinking about this was always the dollar, but actually the dollar relationship has totally broken down. I would postulate because of the position of the US has changed so radically from that 10 million barrels a day of oil equivalent to oil imports 10 years ago to zero today, and the lower dependence on the Middle East. As well as the gas exports, nat gas exports, all mean that the dollar may well have disconnected from its traditional inverted relationship to oil. We've seen that very strongly for 2022. That is to say, the two relations are completely disconnected in terms of positive correlation. That is, we've had a stronger dollar and stronger oil. This past couple of weeks, it's actually gone back to somewhat inverted. And it's also interesting that oil has been inverting with European natural gas prices, which is worth thinking about. So why would oil be traveling in the opposite direction to wherever European natural gas is going? I think that's because the bigger the problem with European natural gas, which is to say the higher the price, the bigger the recession that's coming, which is bad for oil. There's an enormous amount of stuff happening in these next few weeks. October, I'll give you a small one. Brazilian elections, major oil producer. Looks like it'll be a disaster either way, but Brazil is a big one, and that election process lasts the whole of October. The obvious one is the Chinese Party Congress, and whether or not Xi, which we assume will be re-elected, there could be a huge shock there. One theory is why China's behaving so strangely about COVID zero may be that there's internal tension trying to make Xi look bad. We don't really know. I spoke to the largest portfolio manager in Australia yesterday, CIO, and he doesn't know what's going on in China either. But he did note that he thought Chinese demography was worse than Japanese because of the impact of urbanization and maybe de-urbanization at the margin. So that's October. And of course, as you all know, we've got the midterms. The biggest thing politically in the US is going to be this Manchin side deal that was announced at the time of the IRA, whereby he would get regulatory relief for pipelines, and that was a verbal deal with Schumer and Pelosi. And at the time, we were saying, I don't know whether you can easily do that because Manchin actually upset the Democrats by surprising them, and he upset the Republicans by surprising them. And now people are like, I just want to make Joe Manchin look bad. And the obvious way to do that with a very tight calendar for DC this next few weeks is to screw his regulatory change, which is 100% needed. And I wish we could build pipelines in the US. I really do. It would be fantastic for the US. But unfortunately, the environmental agenda is, between idiotic at times and fascist, in my opinion, in terms of rich people telling poor people how to lead their lives. And I've always said the environment is a luxury. Environmentalism is a luxury and a local issue, and those two things make it very complicated. So then we've got the midterms for the US, and then we'll get into winter, Bob. And what I would say at the moment is we're pretty bearish. US demand is looking pretty rough in the latest DOE as of yesterday. We're going under 2020 levels. And we're seeing weakness in distillate demand, which has been carrying the complex. So gasoline has looked weak and gasoline cracks. The simple thing to do is just look at refining margins with all of this. Don't worry about the data, look at the margins. Asian refining margins are now into pretty nasty territory. And US margins are excellent, but entirely carried by distillate. Distillate is essentially the economic fuel. Gasoline is just gasoline in cars, consumer if you want. And that whole setup is looking pretty nasty. And then there's another mega thing that's happening, which is DC and oil and everything, which is the SPR release. Don't underestimate how big that is. It's 1 million barrels a day at the margin. That's a lot. We run about 16 million barrels a day of crude every day in the US to refine, which is the primary demand for crude, obviously. And that 1 million barrel a day is an unprecedented release. We've never seen anything like it. We may not need an SPR because of what I said about the shift in geopolitics and our lack of imports these days. So it may be that you just structurally reduce it, which is just a bonus. But ultimately, that will turn off at the very least officially around October. And then, of course, you go into the midterms because we know essentially a huge part of it has been bringing down gasoline prices for the midterm. So the answer is, Bob, I'm sorry it's such a long answer, but basically it's we're pretty bearish here. We worry about the beta of oils to the market because we're pretty bearish to the market, but that's more your ballywick. But we do worry that oil, we do have a recession portfolio if anyone's interested. It's performing very well. But at the moment, we're pretty bearish into probably trying to load up in November, I would say. Yeah. And not to say that we're not bullish long term, the dreaded I'm super bullish long term, but expecting a pullback.
And yeah, and maybe that long-term bullishness has a little bit to do with the supply side, which is, I guess, the only component in energy investing that you can make a prediction that is kind of accurate, especially if you look over the next decade from what everybody says, and that is just the lack of investment that's been going into the energy complex. You want to touch on that and kind of just
absolutely.
As
it's a great and it's an interesting mega point, Bob, because if you look back at the work that we did of long-term forecasting when our outlook period was to 2015, for example, or if you look back at one interesting document I managed to obtain, which was the ExxonMobil, as was Exxon long-term energy plan in 1980, demand forecasts have actually been quite accurate historically. It's just a function of per capita GDP and population, or you should say population and per capita GDP, and it tends to generate demand, and that becomes fairly straightforward in terms of forecasting demand. The huge shocks in energy over the past 20 years, I mentioned, barring the scale of the Chinese growth, which was actually somewhat predictable because we knew they had 1.2 billion people, was absolutely the biggest single one would have been that US shift, right? And that was a supply shock, arguably. Well, it wasn't arguable, it was a supply shock. And, I think Russia-Saudi is a totally different thing because OPEC, the death of OPEC has been predicted every year, every 5 years ever since I've been doing this. And it's quite brilliantly found ways to reinvent itself. But that Russia-Saudi relationship was obviously a supply shock, but not one that directly changed the demand picture. The shock this year is Chinese demand, which has gone negative, not only oil, but also LNG. And I can only imagine where we would be if China had kept up its pace of LNG buying into this year, because it's been driving the entire gas market as well as the entire oil market. And now both of those things have gone negative, but, where does China go next? Probably positive again. The supply side, Bob, as you've said, looks pretty straightforward. As you know, there was a major argument for peak oil supply in the 2000s that was undermined by the US development. But if you look at the potential of anywhere else in the world to do what the US has done, you don't see it. And one of the key things here is mineral rights in the US. This is one of the more subtle points, which is that in the US, the landowner also owns the mineral rights. And so if you want to frack, you can go to some guy in Pennsylvania and say, dude, I'll give you $25,000 a month and I'm going to have a load of truckers here and people hammering at your ground. What do you think? $25,000 a month, do it for you. And people be like, you know what, screw the ducks or whatever you think's at risk. I'll take the money. And so that mineral rights separation in the US is actually quite unique. And, if you look in Europe, if you were to try and frack the Paris Basin, literally the Paris, as in the city of Paris, it's one of the most prospective unconventional resources in the world by far. The government owns the rights to whatever you produce. And so the farmers are going to fight you tooth and nail not to let you frack. And that goes on all around the world. So that US unconventional revolution is not going to happen again. And we're effectively back into peak oil, Bob. If you look at where the oil comes from, as you know, it's very concentrated. You have Saudi, Russia, US is the sort of 10 million barrels a day plus club. Very easy in oil. Conveniently, the oil market's about 100 million barrels a day right now. You can think of it as 1,200 barrels a second of consumption if you want. So you've got Saudi, Russia, US. US, very interestingly, not growing despite very high prices, nor in natural gas supply at $8 per MMBTU and not growing our supply. So that's like a massive red light going blink, blink, blink. The next complex is the Shia Complex, which is obviously something of a mess. The Shia Complex is obviously the 4 million of some combination of Iran and Iraq tends to add up to about 8 million a day. So basically at the moment, Iraq is probably 4.5 million barrels a day production and Iran is more like 3.5. Historically, those have been switched, but essentially that's your fourth major producer. You then begin to get into bits and pieces, things like the UAE, which is the last, alongside Saudi, the last remaining spare capacity. There is no other spare capacity. Kuwait, it's all bits and bobs. In theory, Venezuela, Canada is huge. But if you look at the list, it's actually only about 10 countries, maybe 12. I would say there's only 12 countries in the world that can produce 100,000 barrels a day or more of world demand growth. And at the moment, oil supply growth. And at the moment, trend demand is probably around 1 million barrels a day per year. So you're clearly repricing. It's really the answer to the price question, right? Which is that you're clearly going to reprice oil to the point of demand destruction and change of behavior and greater, whatever it is you see on the demand side. And that's where it's so tricky. Or you crush the economy. I shouldn't laugh, but that's sort of the dynamic. But yeah, agreed, Bob, that the supply side has a problem and I don't see a solution. Would there be a technological breakthrough? Hydrofracking horizontal drilling is not new technology. The only breakthrough, which was genius, was to combine horizontal drilling, which they've been doing for years, with fracking, which they've been doing this for decades. It was just the wizard that thought, hey, we should combine the fracking with the horizontal drilling, which was Mitchell that became Devon. Yeah, he was working on this for 10 years and they worked out how to do it. And that was the difference. So the real technological difference is not, the real technological breakthrough is not that dramatic. Getting oil out of the ground is pretty basic physics and it's difficult. Additionally, oil reserves are somewhat limited. Gas less so. If you have too much temperature and pressure, you get gas. But actual black oil is kind of quite rare in the grand scheme of things, especially if you're using 1,200 barrels a second. So I think that the 100 million barrel a day oil market that we're currently in will be about the limit of the oil market in terms of ultimate scale.
And so
have to get more efficient.
And that definitely points back to what you originally said, which is demand is everything, because supply is, you can not only predict it a little bit better, but you can also count on how much growth you could ever get. And so why don't we spend some time on the demand side that you've touched on, but you had some very specific, interesting details about that.
Yeah, the only problem is I forgot what they were. I got distracted by thinking of the word that we were using to describe supply when we were just you and me talking about it, and it begins with an F and ends with a D. On the demand side, to think about it thematically, the world is about a third demand. Americas is a third, Europe, Middle East, Africa is a third, and Asia is a third. So that's where the demand is. 60% of world oil demand growth over the last decade, 60% of all growth has come from China. Okay. 0 has come from the OECD. We haven't grown at all. And the rest has been other non-OECD. The other non-OECD, the biggest driver is the Middle East. And then obviously the guys waiting in the wings would be first India and second Africa. And the question is, what price can the economy pay? And that's, the answer that you're going to give me, Bob. What growth at what price economically? Because it's a very difficult, but it is a key question. as you will know, the biggest mistake people make in energy is they just completely misunderstand energy density. And it's like, hey, let's replace coal with solar and wind. The only solution is nuclear, and we're just not going there fast enough. So that's another really tricky one, because there's this, it's just an idiotic misconception that you can replace baseload coal-fired power with solar and wind. You simply can't.
It's
And it's
definitely
just-
gaining in mind share lately. You see it
Huh?
more and more. You see more and more people talking about the urgency of turning nuclear back on, even though there's no political will at this point. But it certainly is gaining headlines more.
No, there is political will. I mean, I think, Germany made the most idiotic mistake by turning their nuclear off, which really related back to, it was a historical legacy of the original Green Party. The original Green Party in the 70s in Germany was about shutting down nuclear, and they never quite, they just didn't change when they needed to. As Putin himself said before the war, he was on a big panel, Western kind of panel. He said, why would you shut down your nuclear in Germany when your neighbor France is 75% nuclear? I mean, it's just totally stupid, right? And you leave yourself absolutely dependent. As the US was correctly warning Germany very vocally, don't get excessively dependent on Putin for natural gas. I mean, it's just mind-blowingly stupid policy. Small scale nuclear, people like, a lot easier than, in theory, you could, when I say, why don't you just put a nuclear submarine device, in a town? The answer is the US military doesn't care too much about cost. Those things are really expensive. I was like, yeah, good point. But now it does seem that we're getting to small scale nuclear. That'll be very interesting over the coming years. People are excited about lithium. They are excited about lithium, but they're excited about what's that stuff called? I'm blanking. The stuff you need for nuclear. I want to say
uranium.
Sorry?
Uranium.
Thank you. Uranium. Lithium is obviously interesting because the solution in theory would be batteries, right? One good line I had the other day was, why hasn't the car battery of your ICE car, your internal combustion, why hasn't the ICE battery changed for 20 years? You got me. As we all know, the problem with batteries is that you need a whole load of coal to mine. I mean, the whole thing is it's crazy. It's worth educating yourself. And if you do want to educate yourself, Vaclav Smil is really the definitive guy on this. He actually does an annual, very good report, I have to say, as a theoretical rival. I don't see myself as a rival of him at all. I think he's a bit of a genius. But he does something with JP Morgan every year on the energy market, and Vaclav is the man. And the thing about Vaclav is he gets units. It makes his stuff kind of unreadable because he transfers everything into units. But I've always said there's only one barrier of entry to being an oil analyst: units. Stop giving me this crap about solar replacing coal. Which, by the way, the solar panels, as you probably know, come from the Uyghur region of coal-fired China. And it's just like, come on, man. And we're waking up to that. So I think the big economic shift is going to be US manufacturing back to the US. That's exciting. That's in that respect, the IRA is a big deal, and how we relocate all the stuff that we casually outsource to China, which is absolutely necessary, is going to be one of the fascinating aspects of the next 20 years. The problem, and I've always said the biggest winner from the energy transition is lawyers. So these jerks are gonna just make it very, very difficult and make loads of fees and just, it's just so easy in the US to get in a legal process about anything. That's why I'm very pro the Manchin attempts to improve regulation. And you could argue that if we get Republicans in power, maybe it'll become more like the Trump era, but it felt that Trump was environmentally irresponsible, so I think you've got to do this in a smart way. But yeah, relocation fascinates me. And by the way, that's where it's so interesting, where Tesla's so interesting, right? And when you start thinking about Musk as a manufacturer, an American successful, in theory, I assume he's going to be successful with the Gigafactory in Texas. Today announcing, or I think it was in the last 24 hours, certainly announcing, look, we're not going to build batteries in Germany because we can't, there's no energy. We're going to bring them back to the US, and that's a big deal. And good luck to us.
When we're looking for looking for supply, scrambling in the renewed great power politics and challenging supply. When the U.S., some of the threads that you see in the U.S. are the State Department and the White House reaching back out to Venezuela. Is this, as we, friend shoring doesn't apply to Venezuela, but it is in our sphere of influence in a way that a lot of the rest of the world isn't. Do you see, first question, do you see the U.S. potentially changing our policies toward Latin America based on this energy issue? And another question, is there anything meaningful potentially about an Iran nuclear deal in terms of supply or reorientation of the sort of geopolitical alignment around that would have any relevance for energy market?
Yeah, I mean, further to what you clearly know that arguably Venezuela has the largest oil reserves in the world. I mean, if you include heavy oil, you've really got Venezuela and Canada, which is great for us. Canada can't get out of its own way, and it's not helped by the US. But obviously, we're very fortunate that our largest import source of oil is Canada. Venezuela, my father was a senior diplomat, and he actually attended the 1980 independence of Zimbabwe, which is super notable to me because Bob Marley played at that independence. But what I observe is that Zimbabwe has got worse every single day since independent, and it'll probably be worse tomorrow. So I'd ask David Clark, a guy I work with, super smart analyst I work with, has a failed state ever recovered? Is there an example of a failed state actually pulling itself back together? And he was smart enough to immediately answer, yes, Japan and Germany post-war. So I changed the question. I said, okay, is there an example of a post-World War II state that's ever pulled itself back together? So, I mean, you can't, I mean, there is no example of somebody. Now, some of these countries are structurally a disaster and always will be. So Iraq, Nigeria have colonial borders, right? So the white guy turned up, let's say the Brit turned up, saw a load of black people and was like, okay, this is Nigeria. There is no place, this is Christian oil with Muslim politics, you know what I mean? And the border makes no sense. And I'm sure you're all fully aware that the US did have an opportunity when it invaded in 2003 to reset the borders of Iraq. But right now you have Sunni, you have Shia oil next to Sunni politics with, Kurdish, Turkish. It's just a disaster area. So I think, political back, and this is why I'm skeptical whether Africa can really grow in line with its population, which is to say, can they increase per capita GDP in the way that their population will increase GDP? Because they're sure as hell going to grow the population at the current rate. They're by far the fastest growing demography in the world. Although I always say that Colorado does pretty well with a combination of Latinos and Mormons, right? But the answer on Venezuela is I just don't see a recovery there. I spoke to Ron Lance, who's the CEO of ConocoPhillips, about the fact that the administration had approached Venezuela to try and alleviate the sanctions and get some oil when they were just desperate for more oil. They kind of embarrassed themselves by going and begging to the Saudis, and worse, begging to the Venezuelans. It's just humiliating. It just showed they knew nothing about oil. The Venezuelans Ryan said, the Venezuelans owe me $6 billion in a judgment in the International Court of Arbitration in The Hague. If one cargo leaves Venezuela and comes anywhere near the US, it's mine. The administration didn't know that. They didn't know there was an Exxon judgment, a Conoco judgment, and they get a call from Exxon and Conoco saying, we'll sue you, the US administration, if you keep going with this. These are judgments in the International Court of Arbitration in The Hague. This is not, these guys are really good at what they do. Conoco and Exxon, you don't mess with them legally. So Venezuela looks like a problem unless you get some sort of revolution or recovery. And as I'm saying, history doesn't suggest you will, tragically, right? And it used to be by far the best run state oil company in the world, PDVSA, until Chavez. And that really is ultimately very much the curse of oil, which you're all aware of, which is that when you discover a lot of oil in an emerging country, you produce the oil at the expense of everything else. Your currency gets too strong for you to produce everything else. So essentially you start, your currency strengthens, and the elite buys Ferraris and sends their kids to British public schools and buys houses in Kensington, and the poor really suffer and ultimately revolt. and then someone like Chavez takes over. It's called the Dutch disease because the same actually happened with the Groningen field in Holland without the political upheaval. And the Groningen field in Holland is probably the single biggest unknown almost problem with European gas, which is the Dutch shut that down. It was the swing producer in Holland in Europe of gas. Incredible swing in production performance between winter and summer. Effectively an enormous gas storage unit that the Dutch have shut down over the last 10 years because of seismic activity pertaining to its depletion. So that was Latin America. I don't see much hope. And if you read The Economist this week, by the way, speaking of my father, he always said, The Economist is just an authoritative global journal on all matters pertaining to sort of global economy and geopolitics, apart from the subject you know about when it talks total crap. He was an Africa expert, so it's generally totally horrible on oil, but I think it's absolutely unbelievably good on Brazilian politics. Yeah, Brazil looks really nasty if you read that. If you read The Economist this week in terms of the election and what could happen. I mean, they're talking about a coup potentially with Bolsonaro versus Lula, and Lula is the problem is you get more divided, you're going to get a more left-wing outcome if Lula wins, or a more right-wing outcome if Bolsonaro decides to fight. Bolsonaro being the one difference is listed by the Economist of the differences between Trump and Bolsonaro, which included things like bragging about how beautiful his wife is, was that the two differences they highlighted was that Bolsonaro is ex-military, which we know that Trump surely isn't, and Bolsonaro is not vaccinated, whereas Trump is. Everything else, they're very similar. What was the other one that I forgot to write it down? You said Venezuela, Latin America.
Oh yeah, the last one was Iran. If there's any significance to a potential Iran nuclear deal, any like geostrategically or anything that feeds through to energy prices, other than
I mean, again, it obviously fits the bill of a failed state, right? I mean, you had one of what's known to be a wonderful, deeply historic country, which national passion is poetry. You know, how good is that? And it's run by a bunch of jackasses, and I just don't see it necessarily getting better in Iran. It is always interesting to me that there was a moment in history which is very worth knowing, which is that in 1979, Margaret Thatcher won the election in UK. Pope John Paul II was elected Pope. Ayatollah Khomeini revolution in Iran, and Deng Xiaoping came to power in China, all in the year 1979, and obviously in 80 you got Reagan. So, it's incredible that these guys have just done a Zimbabwe, right? They've just effectively made Iran worse every day, unfortunately, for such a wonderful country. At the moment, I think the big marginal change on the short term is they're actually being allowed to export. The US is not imposing sanctions. They do have somewhere around 70 million barrels of floating storage that could be released in the case of a sanctions lifting. But I think as the oil prices come back, and as the Iranians, there was one senior European foreign policy, I think he was almost a foreign minister, maybe the Danish foreign minister. He said that the thing about negotiating with the Iranians is like playing chess with a monkey. You get them in check and then they eat the king. Which was not taken well by the Iranians, especially as I think they might have invented chess. I don't know with Iran. I mean, they're at war, right? Israel more or less openly fights them, constantly. I mean, if you see all these guys blowing up, it's like falling out of a window in Russia. You see, it's a really dangerous job being an Iranian nuclear scientist, and it's basically Mossad killing them. I just don't see how, the fundamental principle of the French Revolution, and it's so important to continue it in any society, is separation of church and state, right? And you've got it. It's the year 1580 or something there. It's like, come on, guys. And the level of corruption and what happens is that because you get very rich, self-serving elites in places like Venezuela who have very nice lives, they just essentially use their money to brutalize the populations. It's tragic, but I don't see how it solves itself. In terms of oil supply, if everything normalized in Iran, they could probably add not a whole lot more production, actually. They might be able to do about 500,000 barrels a day more from their current levels, but it's actually not a lot. And the people that told me that are called Aramco, so they kind of know. There's a lot of the kit is still Anglo-Iranian oil, which is BP, which is to say it's still the same equipment that was pre-revolution. And, with sanctions, they do struggle to get the right equipment, and they certainly don't have the right technology. So I've not seen Iran as the threat that the market tends to see. The reason that the oil market trades Iranian headlines so aggressively is basically because of the floating storage. If that gets released, you're going to release, 70 million barrels, half of which is condensate, by the way. So it would have to be very discounted oil would get released onto the market. But structurally, I don't see any threat from Iran or Venezuela. I wish I could. I mean, there was always a time we used to brag about Venezuela because it had the most Miss Worlds of any country at one point, I remember. We was kind of keen to go to Caracas. And people who've lived there say it's the most fabulous place.
Paul, by the way, if anybody's on and wants to ask a question, just go ahead and type it in. I am, because it's so politically charged, it's not simple to understand what the effect of the Biden administration has actually been on U.S. production. Can you straighten us out on what is it that they've been doing that constrains it at all, and how constrained has it been? And if it were to change tomorrow, how much extra production could come out?
Well, for sure, we know that just quantitatively, the oil sector oil equities perform much better under Democrats than Republicans. It's just a proven, fact that the oil sector has a bad time under Republicans and a good time under Democrats. That may be a very long-term coincidence. No, I think their energy policy has been an absolute disaster. And, I think they greenwashed. I think what they did basically was they polled against Trump, and they found out they need to do something about women, and they need to do something as regards young people regarding the environment. And they just said whatever came to their head. I mean, they didn't know anything about energy. This Jennifer Granholm is probably the worst energy secretary I've ever seen. I'm sure you saw the time when she announced the SPR release and was asked, by the way, how much oil does the US consume every day? And she's like, I don't have that number in front of me. And, so she's just announced, at the time, it was a 60 million barrel release, and she didn't know how much we use a day. The answer being 20 million barrels a day, by the way. So it's been really quite poor. And to me, was all rhetoric to try and win the election. I mean, for example, if you ever had the misfortune to read AOC's Green New Deal, it's the most trite set of platitudes. It's back when my kids were in high school, when they wanted to try and run for class president, there was a ban on promising free candy and no homework. You weren't allowed to run on that platform because you would win. This, AOC's Green New Deal, which has become kind of the bedrock of what they talk about. It's like free candy and no homework. I think that through the cauldron of reality, they've improved their policies a lot. And I think Manchin has done a good job of making it real, not least because he's a coal guy, right? And it's not that I'm very opposed to coal. I don't think you should use it, but at the same time, you don't want to decapitalize your energy system before you've recapitalized it. You know what I mean? You've got to build this stuff and then decapitalize. The oil, what nobody seems to understand, and it's so obvious, is the oil companies are terrified of the demand side. They're not threatened by the supply side. You can add as many solar panels as you want. It doesn't matter to them. It's not what matters. What matters is if people really start to change their behavior in terms of consuming oil and gas. And nobody's really doing that. The change in per capita energy consumption is not really significant. And it's not even obvious that you get a major change in per capita energy consumption globally if you drive an EV. I mean, cradle to grave, it's not obvious that an EV consumes less energy than an ICE, because of all the energy that goes into making it, and all the materials. I think, have you read how many tons have to be moved for every battery? It's like 100,000 tons of materials have to be moved, or something insane, and it's all diesel fired. How much difference do they make? Well, they do add, well, by the way, it's worth mentioning that the EU has just announced a windfall tax, right, on fossil fuels. So you'll see that the European stocks, because of that threat, consistently trade at a discount for numerous reasons, but that adds to it, which is to say the volatility of government policy is horrendous for equity valuations. And, nowhere is, it was always the joke when we used to talk about risk in oil, that there's 3 Gs, geology, geography, and geopolitics. And the riskiest place to invest in oil was the UK, because they just constantly change the tax system. The wonderful thing about the US system is actually the basic royalty system of 40% plus the mineral rights has meant that the US is one of the best investment environments for oil and gas, notwithstanding all the headlines and everything else. We wouldn't have such a huge oil industry, but we're the best, pretty much the best place to reinvest in oil. The reinvestment rates are very low, is less to do with government policy and more to do with trying to make returns. So I think what the companies have done over the past 10 years was a technological experiment in fracking for oil. And so they heavily spent as almost an R&D effort, and the returns were absolutely disgustingly bad. They destroyed vast amounts of capital. And analysts like me started saying, firstly, that we had managed to turn around the refining industry, right? By capital discipline and running for cash, the refining industry had become very successful from being just the most hated sector. As you remember, Bob, when I worked with you in 2017, we had written a note called The Renaissance of US E&P. People like to say Renaissance. Where the oil price was at 50 at the time, the future strip was flat at 50. That's not a bad price in historical terms for oil. The companies had the best investment opportunity that had ever, which was the Permian with horizontal drilling and fracking. And the sector was absolutely hated. And I was writing analysis of this sector, and I was like, why is this sector so hated if the oil price is okay, if you've got the industrial opportunity, if people are still driving Tahoes or whatever, huge SUVs, how can this sector be so bad? And the answer was, the problem is the companies, the managements, the strategies suck. And so there was basic recommendation was like, you've got to stop spending so much money, and why are you trying to grow? And once they got that memo, and the other argument, which was obvious, was which happened with refining, is if you all behave in a sensible manner, you will have, an in toto benefit that capital discipline will lead to higher prices. And don't cheat. And they basically got the memo. And the other thing was stop hedging. People don't own you as a company to trade oil. They want to be long oil. So don't be idiots. And we'd said the same thing to refiners. Refiners always used to screw up their hedging in the 2000s. And eventually it was just like, would you just stop? Nobody is owning a refiner for your ability to trade. If I want a trader, I'll buy Glencore, which I thought was quite interesting the other day. Actually, someone said Tesla should buy Glencore instead of Twitter, and they're dead right. I'd had a conversation with a major long only who'd been talking to the CEO of Glencore. And he said, only one company is organized about the materials that they need for the next 10 years, and that's Tesla. And they've been talking to us for 10 years. We literally got a call in the last few weeks from, the newly appointed head of materials sourcing at GM going like, hey, by the way, we need, and the guy's like, are you kidding me? These big bureaucracies like GM and Ford, I think, are going to really struggle with this challenge in a very big way, because we're grotesquely short materials for all this stuff, and they've made wild promises. So I forgot what I was talking about, Bob. Sorry, what was the answer?
No, you touched on the multiple levers of the public policy.
Oh, you asked me about Biden. Yeah, I think they're getting better. As I said, they're beginning to wake up to it, and they're talking to people. We wanted this guy Jason Bordoff, who we all know, to be energy secretary, and we know him from the OPEC meeting. And he's an intellectual Democrat, oil, savvy person who's been to OPEC meeting. But he was considered to be tainted by fossil fuels. So they appointed Jennifer Granholm. If you look at Jennifer Granholm's track record as governor of Michigan, I'm personally bitter about it, because I was trying to get long electric cars, and I bought A123 batteries that under Granholm, was quoted and went to zero, bankrupt. And then I was put off buying Tesla. But if you look at the rest of her energy policies as governor of Michigan, you wouldn't let her run an ice cream stand. And, but because, of whatever reason you want to make up, not relating to being tainted by fossil fuels, she became energy secretary, and she's Canadian, by the way, which I didn't even know you could, well, whatever. But no, not a strong candidate. And, in the past, you've had Nobel Prize winners in that role. It's kind of staggering that you would have someone that didn't know anything about it. But no, I think that they've kind of improved. And the main thing always is to just get out of the way of the market with these things, right? That's why nothing that's subsidized is sustainable. Go and think about that.
That's a good segue into the policies that we're talking about in Europe. The incoming the new Prime Minister of England, Liz Truss, day 3, she capped heating and energy bills. The European Union obviously is trying to do that. They are, subsidies, the point you make on subsidies, I think, is well understood by economists, but the politicians have very challenging balance to strike. And then there's this idea about capping Russian oil with the G7 combining to utilize their insurance. And I don't know if there's any real way forward on that, but wanted to get your take on the sort of broad panoply here of the most aggressive interventions in the energy market, and talk through some of these and how you see them playing out.
Yeah, I'm really glad that you raised the price cap, because that, if you remember at the beginning when I was wrapping on, I forgot to mention that that's another thing that we're going to be looking at before Christmas. And Foreign Policy had an interesting article basically saying everyone's mocking this as being dumb, but having spoken to senior people in the administration and members of the British cabinet and all this stuff, we think it's actually going to work. And it does seem they're going to be serious about applying it. What I will tell you is that for sure, nobody in global business wants to mess with the US Treasury. I mean, these guys have a lot of power, and nobody needs sanctions against them. And this is a big business. This is the biggest traded commodity business in the world. So the vast majority of players, if there's a threat from the US Treasury, they're not going to go there. So it could work. These Russian guys can cheat and whatever and pretend like they're winning. They're losing really badly. So is Xi, by the way, the Chinese Communist Party. But I do think that there's a very real possibility this goes through, yeah, and it works. But it's such new ground, that you can't really be sure. One of the interesting things about this year, and Bob had referenced it, was in March, you would have said, okay, we're going to lose 2 million barrels a day of Russian oil exports immediately. More, could it be as much as 4 million barrels a day over the course of this year? And we're going to get growth of Chinese oil demand of 2 million. And, you didn't get the Chinese oil demand, you almost got the opposite. It's gone negative. And Russia just kept exporting crude, and it wasn't official sanctions. It was, apart from the US was the only official sanctions, and we didn't really import any Russian crude. But the reality is that you didn't lose anything like as much supply as you thought. And I think with the resurgence of, I was having to explain yesterday to the Australian CIO what dark Brandon is. But the new version of the Democrats that's sort of had a much better summer in terms of political successes, which strangely I said pertained, in my opinion, a lot to Roe versus Wade. I think that was not appreciated by a lot of women voters, and you began to see a shift in the political sort of zeitgeist of the country, in my opinion, speaking as an English guy, of course, I apologize. But the point is that I think they're feeling empowered. I've spoken to the State Department, and they think they're doing a great job. And my guy in the State Department is a Republican, borderline Trump guy, and he thinks Biden's doing a great job. Because Biden, of course, is a foreign policy guy. And, he says, we haven't crossed the red line in Russia, but Putin is getting wrecked here. If you think about what would have happened if he'd taken Kiev, and it could be a very different outcome than what we're looking at today. And he has got destroyed. So I think that they feel that they're doing a really good job. The other thing he told me, by the way, is it's a very deliberate policy to go after China. They're like, we had made a huge mistake over the past 30 years, which was we thought we'll let the Chinese cheat. Well, let's get our ducks in a row. We'll let the Chinese grow their economy very rapidly, even if they cheat a bit, because ultimately it will lead to the emergence of democracy in a communist country. Yeah. And you look back and you're like, that didn't go too well. You actually have allowed them to cheat. Arguably, by cheating, they're stealing. Certainly, we all know they've stolen vast amounts of intellectual property, everything else. And at the end of it all, you've ended up with a totalitarian regime that's going to invade Taiwan, and it's going to be a real pain in the ass fighting them. It's been a disaster. So they're quite deliberately, the whole Taiwan thing, they knew exactly what they were doing, dude, with Pelosi. That was like, it was funny watching everyone get there. I thought it was hilarious. And, Nancy showing up in a bright pink, in case you could miss her, she lands in like the pinkest of pink full suits. I was just like, this is so much fun because, as a son of a British diplomat, I'm no fan of the Chinese Communist Party, especially not regarding Hong Kong. My father was involved in all those processes, and I don't appreciate what they've done at all. And I just think that they've done actually a much better foreign policy job than they get credit for. That's a long way of saying that I think that they might pull this price cap off. The other thing that I've been saying is you have to wonder whether Putin can risk going, and we don't know if he's turned absolutely crazy. He might be crazy, but if he's thinking 4D chess, he can't really go through winter without getting something before winter. Do you know what I mean? Because at the end of winter, he's definitely got nothing. He's destroyed Gazprom. He's destroyed the premium gas company in Europe and globally. And at the end of it, it's going to be like, hey, guess what? We just proved to ourselves we don't need Russia and we're not going back. So, what's he achieved? He's actually gone backwards a long way. So are we now, and this is one of the most interesting questions further to the post-Labor Day question, are we now actually...
Yeah, that's the... Oh, sorry.
So you broke up a bit.
John, what were we saying? It looks like he might be frozen.
He is frozen in time. The
Yeah,
market's not doing too well.
Yeah. So anyway, you were just finishing up that idea that.
Oh yeah, that Putin has to play. He arguably this is the most. And by the way, I was saying this 3 weeks ago that this is the key time for Putin to get to pressure Europe to the most terrifying point, which is pre-winter.
Yep.
Take gas supply down to zero, etc. But then, of course, what's happened in the past 2 weeks is they've suffered major military setbacks. Now, I don't fully know about the military setbacks because although they say it's like an area the size of Wales, I never think Wales is that big. And it still looks like he's got his land bridge, but this is clear it's been a total military disaster. And I think everyone's biggest fear, obviously, is that he is completely crazy and does something completely crazy in terms of scorched earth, which he's more or less done.
That would be bad.
Yeah, the State Department guy didn't really encourage me because one time when I called him was very early in the conflict when that nuclear plant seemed to be on fire, and the market was down like God knows how many handles on that. And it was evening. I was in the West Village. He's like, "Well, Paul, you got to know that it's relatively easy to survive a nuclear strike. You just go to your basement. You just go to your basement for 3 days and then get out of town as fast as you can." I was like, dude, have you seen my basement? I'm in Brooklyn.
I guess you need those little yellow boots that Jimmy Carter wore too.
There's a pretty good documentary on Netflix actually about 3 Mile Island. If you haven't seen it, I recommend it. But yeah, no, so we don't know, but apparently he can't nuke the Ukraine because he'll get the radioactivity back in Russia. So we'll see. I was always read, if you read Hampton's Babylon, that the windmill in East Hampton is a Russian nuclear target if they decide to strike at the weekend. So avoid the windmill. I used to live next to that windmill. I was like, oh, that's not great.
Famous windmill, if there ever was one.
That way, once you know that about that windmill, you think about it very differently.
Every time you drive by it. John, did you have a question as you're being frozen out by Zoom?
Sorry about that. Yeah, I was just flashing forward to I know we've got about 5 minutes left. I want to make sure that we get any questions from the audience. If anybody wants to put in a chat or anything, please let me please let fly, and we'll take that on. But just with the last 5 minutes, when we think about a longer term, based on what you said, Paul, having that density of energy, nuclear is potentially on the comeback trail here, and with some of the challenges of the green and renewables in terms of energy density and and just capability, and some of the limited materials that have to go in them. If we flash forward 20 years or into an energy future, what is the mix? What does it look like? And how have we gotten there? Is peak oil, the one thesis was oil goes up so high and is in its later years as it's dwindling, in supply, and the transition is very rocky. It just creates a massive crater in global growth and impedes India, impedes Africa. The carbon density is just not in an affordable place. Is there and then the other is the transition is so seamless that oil, they don't even bother to pump all the oil out of the ground because we've got our energy from, we got the France model, 75% nuclear. If you can just leave us with a big picture in the next, couple of decades, what's your base case on this grand transition? What is it? What are the price action underneath it look like? And where do we arrive, sort of 20 years hence?
And I would also add electric vehicles, where we kind of went from it's something that the states subsidized to now actually the consumers really seem to want them, and we don't seem to be able to produce the batteries to fulfill that need.
Yeah, so the single largest sector of the global oil market, I've said it's 100 million barrels a day, is 10 million barrels a day of US gasoline demand, right? Which is an insane number for us relative to our population globally. I think.
No, we work from home 2 days a week now, so we're doing better, right?
We're watching the data, but we think that's probably gasoline intense, right?
That's amazing. That's amazing.
Yeah, I mean, I think it uses more gasoline, and additionally, we suspect that guys like Bob, I used to work with Bob. I couldn't afford to take an Uber both ways to the office from Brooklyn Heights. It was just too much money to take an Uber both ways every day of the week, So I would take a subway in the evening. But if I was to go just 2 days a week, I would just take an Uber, right? I just cut out the subway.
Yeah.
Stuff like that, but also, obviously, if people suburbanize, it's more gasoline intense. People hugely exaggerate the EV sales numbers. They are impressive in China, actually. But if you look at it in California, there's a couple of interesting things. Firstly, the entire Californian fleet is only 3% EV, which you would never second guess from going there and looking around, because it looks like almost But I guess I hang out in rich areas of San Francisco.
Right, exactly. Yeah, you don't go into
I thoroughly recommend not going to San Francisco. Actually, I had a very nasty trip downtown there last September. So basically, there's a couple of interesting things about California. Has only 3% EVs and is more than the rest of the US combined, right?
That's mind-boggling.
Secondly, 20% of Californian EV owners, that was shown in an academic study, went back to ICE. And that's not in the models. Nobody allows for the fact that people have one of these things and go actually. And what they said was, it was some very funny woke way they had of saying, and I'll just say it the Sankey way, which was that women were much more likely to switch back. And it's to do with wanting the security of the larger vehicle.
The safety, yeah.
Exactly, the security of the larger vehicle and the security of being able to charge. There's also a lot of chat, for example, with the extreme weather that you get in much of the US, that you have major degradation issues in terms of battery performance in extreme cold, and maybe in extreme heat, but more so in extreme cold. And finally, you have this incredible thing that just blows your mind. In the last week or 2 weeks, California said, we're not having any more EVs after 2030. By the way, will you not charge your EV this week? It's just like,
it literally happened in the same week.
If you looked at yourself, it was like when that freaking Newsom, was like
Saturday Night Live.
Unbelievable.
No, I know. As someone, I would love to save the globe, but I also understand the realities of
The other thing is,
what we're dealing with, and that summed it up perfectly.
But on top of that, but there's more. EV prices are rising quite fast, so that the whole convergence, because the theory is you need to get them below the price of an ICE. It's basically a superior car, but people do a very aggressive PV if they're a consumer. They don't do a 10-year present value, right? They just look at how much it costs and how much they'll save a year. And they need a payback very, very fast. So that's that. And this market has not penetrated lower income people in any way, shape, or form, right?
But also, let me ask you, so the latest bill that we just passed, the Inflation Reduction Act, which really doesn't have anything to do with inflation, it's more environmental. But Manchin was able to put in it that everything has to be, for electric vehicles, everything has to be produced in the United States, which is a big deal. Elon Musk is maybe not doing something in Germany and bringing it here, which isn't necessarily the most efficient way to produce vehicles.
Yeah, well, it's certainly not going to bring down the cost, because if you were watching Tesla, as I have been for however long it's been in existence, he had been saying that we'll get this thing down to 25,000.
Yeah.
You know what I mean? And recently he's put full self-driving. By the way, I cover Embark, which is a great autonomous truck story, software as a service. Love those guys. 25-year-old CEO, just a prodigy out of San Francisco. Embark, which is trading at 10 cents or something at the moment, but I love him. But he as autonomous truck, because autonomous trucks are very doable because you're depot to depot, right? You go down the freeway and you're not trying to drive down past a kindergarten in Brooklyn or something totally terrifying. But anyway, let's not get sidetracked into all of that. The fact of the matter is that the average American household, somewhat surprisingly, I guess, or maybe not, has 2 cars, and I would envisage a future where, and that's the average household, where the average household has 1 electric, 1 ICE. Right. I mean,
early hybrid. Yeah.
And on that basis, you will reduce US oil demand by somewhere around 1 million barrels a day of gasoline demand by 2030-ish. That's what my numbers show. And you need to see that really kicking in. If it's going to happen, it will be in the 25 timeframe. One of the things you got to remember is when they say, oh my God, 15% of vehicle sales are EVs now, that's pathetic. 85% of them aren't. Right, just do the reciprocal.
Yeah, but also, if we're going to reduce it by 1 million barrels a day, what amount of reduction matters?
My rule of thumb is that anything more than 100,000 barrels a day is actually material in the market, because you don't think, I keep saying it, and I'm going to talk against myself. Everything in oil is set at the margin, right? Market's 1 million barrels a day, that's big. Excuse me, market is total 100 million barrels a day.
Right.
But annual growth of 2 million barrels a day in demand that we see this year is a very big year for demand growth. And that's, I don't need to explain to you guys as economists why, it's a very simple thing that you have to understand, that everything's set at the margin. So if you lose 1 million barrels a day of US gasoline demand over the next 10 years, accelerating from 2026, it's actually quite meaningful. I mean, it is meaningful to the market. But then again, you've got also, whether or not people, for example, here are using more electric bikes, instead of just pedaling. There's all sorts of weird things that you have to think about. The long term, Bob, I think we're plateauing the world oil market. You've got to remember that you can crush coal to oil at $150 a barrel. So, you don't want to get too hysterical. The demand side is much more difficult to second guess. So it's you've seen that people do change their behavior and can change their behavior. I've always maintained that because the US is so inefficient in oil and energy use, it's easy for us to get more efficient, right? Whereas it's a real challenge in Europe. If you look at where they run their thermostats and where they're expected to run their thermostats, it's shoof. And they can't drive any smaller cars. you need more bicycles in Holland, right? But you get the idea, right? So the potential for the US, especially if it's the global economic driver, which I think it will continue to be, and I think is manifested in the strength of the dollar. It's just, I mean, if you think about the insanity, and you only have to visit Europe and then come back and look at Texas, the insanity of the vehicles that people drive and stuff, the economic outcome of getting from A to B is essentially the same, you know, in a small 50 mile per gallon car as it is in a gigantic truck, you know, with. I saw a great one today, which was a massive truck, which on the back was written, "Biden is a trader, TRADER." I loved it.
That's a genius.
There's
That's
actually, you know,
genius.
I did this thing with my son. I used to do it going to the Hamptons, which was, okay, let's see how many US pickup trucks have something in the back. So my guesstimate was that 80% of pickup trucks aren't carrying anything. You know, it's like, okay, we'll see how they like $8 a gallon, and they probably won't keep driving around an enormous truck. You know what I mean? It's not that difficult to change behavior. It's very easy, actually. So, I mean, the US could get a whole lot more efficient. I think that generally, I like the idea that the era of cheap energy is gone. You know, that you just have to structurally price in higher energy as part of your metrics, and you need to be resilient to energy prices and to environmental change. You know, you need to be, as I said, I live in Brooklyn Heights. It's not an accident. You know, don't be buying that estate at waterfront in the Hamptons for $10 million an acre, man. That's my advice. So yeah, I think that it's ultimately cyclical, and price cures everything, right? So what really is bullshit is when people extrapolate, you know, the famous London horse dung. I don't know if you know the London horse dung story, but essentially they extrapolated the growth in manure from horses in London in 1890. And, you know, it calculated that London would then be 20 feet deep in manure by 1930, you know, and it's like, okay, great forecast, you know. And so these things are all.
No one would notice it piling up.
Yeah, you look it up. It's a famous economic, you know, it's like a bad modeling London. I think it's called the London manure, London horse dung model, you know. And I just see it all the time. That people just extrapolate the current trends, and they're like, "Aren't I a genius?" And you're like, "Not really." So it'll be fine, guys. Don't worry. You know, it'll all work itself out. The world is a great place to live. Enjoy it.
Well, thank you very much for sharing your insights with us. A truly insightful and wide-ranging, sobering at times, but very enjoyable conversation. Paul, we really appreciate it.
Cool. Thanks, guys. Stay in touch.
Thank you,
Sankey
Paul.
Research.com.
Thanks, everybody.